Will market makers drive Bitcoin deeper in today's session, or have they satisfied their appetite for liquidations and about to send it? Let's discuss. If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms, with a focus on market structure, liquidity, volatility, and time-price volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Overnight in the Asian session, price continued in a downward trajectory, initially finding preliminary support at 70,000 and subsequently climaxing at the session low of 68.8 thousand. The descent from the midweek high of 73.7 thousand translates to an over 50% retracement of the impulse. Price has been consolidating in the London session, but has yet to show a change of character in market structure to confirm a resumption of trend higher, the level to accomplish that being 70.5 thousand. If unsuccessful, levels to the downside our model projects a reaction are 68.1 thousand and 67.2 thousand. If price does not inflect higher near these levels, the probability increases for a deeper correction to 63,000 and eventually 61.5 thousand. The backdrop is indicative of local price action being corrective rather than a more sinister reversal in trend lower. Sentiment as indicated by the Crypto Greed and Fear Index remains greed. ETF flows yesterday were net positive, albeit down substantially in volume from previous sessions. Futures open interest remains near record highs. Also reflecting expectations of higher price are volatility markets, with the call-put skew positive in all expiries longer than 1 month, and persistent demand for November and December calls with strike prices over 80,000. Time price volume metrics also are symptomatic of corrective price action, along with real-time indications of absorption subsequent to the overnight low. Near-term tentativeness is reflected by perpetual futures funding turning negative overnight, driven by fresh shorts, and the call-put skew negative in option expiries less than 1 month. Looking forward, the coming week is likely to be one of the most eventful of the year, with the US presidential elections, as well as the US Federal Reserve monetary policy meeting. Additionally, third-quarter earnings remain fluid, which, as we saw in the previous trading session, can be a significant catalyst for price action, and the correlation in equities having potential to take Bitcoin along. Geopolitical tensions also have the potential to flare up over the weekend, with imminent new flashpoints in between Iran and Israel. In terms of strategy, we reiterate our long bias and expectations for higher prices going into 2025. Our model projects a price in excess of 81.5 thousand by January month end. As price does not follow a linear trajectory, our model's projections of the aforementioned reaction levels to the downside are potential setups to which we will evaluate increasing our long exposure. Volatility markets are also likely to create compelling opportunities to harvest volatility premia. Thus, we may look to create synthetic long exposure via short option structures, as we expect implied volatility to mean revert in the weeks subsequent to the next week's event risk. As always, do your own research and analysis. Be safe, and good luck in trading.